Good afternoon, everyone. Please excuse the gloom in my office. There's been another power failure here in South Africa, and so we have 6 hours of no power again today. Nevertheless, we can look at the charts and go through them quickly. I'm holding a live stream tomorrow morning. Hopefully the power will be back on and we can do a bit more detail then. So check out your inbox for that, and also make sure you subscribed and press the notification bell. And if you want to join the members only live streams, there's a join button below. It's $1 a month. So I look forward to seeing you in there too. Let's have a look at the stock markets. As you know, we had a gangbuster rally on the Nasdaq and the S&P on Friday, moving up to new recent highs, the biggest rally in 20 odd years on both the Nasdaq and the S&P. Notice this purple line that we just touched on Friday. I actually told my private group this is probably where we would reach the 200 period moving average, just below 20,200. We're in a very difficult situation now, having broken above support, but below the 200 and below that long-term channel line. The 100 still above us at 20.5, as is the 78.6% Fibonacci level at 21,000. I still think as long as we're below 21,000, I'm relatively strongly bearish on the Nasdaq and the stock markets in general. If we break up through 21,000 and move up towards the recent all-time high, we may retest that, even poke through it slightly, and then move back down. Please remember, we are in a bear market. We've dropped over 25% on the Nasdaq, close to 22% on the S&P in this big move down with the tariff announcements. I know it's been a shock, and I know it's been crazy. And this is what happens in big bear market reversals. We get a dramatic move down, an equally strong move back up again, almost back up to where we started. The first point of call, of course, is the 200 period moving average, which we broke through, retested from underneath. This is the second retest. I'm not discounting the fact we could get through there, even through the 100 and through this yellow block, and then move up to the 78.6% Fibonacci level at 21,000, and maybe even higher, maybe up to the recent all-time high and even fractionally higher. But remember, we're in a bear market. These big thrashing whipsaw markets take place at the top of trend changes, and we're going to see a lot of people getting trapped on both the long and the short side. Be very, very careful. I'm completely hedged on this. I'm looking to exit and take profit on the long side somewhere up into these regions, possibly looking early on Monday or Sunday into this region up here at around 20.5, allowing for it to get up to 21 to add a little bit more on, and then waiting to see what happens thereafter. These are pretty scary times when we get these massive moves, and as you know, market climbs up the stairs, falls out the window. Bears fall out the window. We've done that. We've now rocketed back up to the window opening, trying to get back in there. Can we do it? Perhaps we can. All sorts of things like the Zwag breadth thrust and this big move, the biggest in 20 years, from the bottom up to the top. The S&P, a similar sort of picture here. There's the 200 period moving average, and there's my blob, which I think we may get into. Very similar to the Nasdaq. There's the 78.6% Fibonacci at 5,580. And the blob starts at around about the 200 period moving average at about 5,750 up into about 5,8. So let's see how we go with that big strong close on Friday on both the Nasdaq and the S&P. I expect we'll see some follow through. So we're hedged on the S&P along with the Nasdaq. These hedge positions are very close together, so almost negligible in size. We may as well just be out of the market for now. But we are long on Mara, Target, MSTR, Tesla, Coinbase, and Google. All of those moving up in sympathy with the markets, looking pretty good. And perhaps my favorites, if Bitcoin can keep going, are MSTR and Mara. We're in good profit on both of those right now, as we are on Coinbase. A little bit of catch up to do on Tesla still. We're in profit on Target and on Google now too. So all of that's within the backdrop of the dollar. Is the dollar going to carry on moving down, or do we have to retrace? My target for the dollar index is about 93. We're trading at 100 now, just having reclaimed that on Friday and Thursday. We are at the 20 period moving average, first resistance, but we could get up to the 50, somewhere closer to 103. Whichever the case is, I'm looking to sell the dollar and buy the euro and buy the other majors. I'm already long on the euro, bit of a dip down on Friday, but we're also long on the US dollar Swiss franc, on the Swissy, and that's simply because of this big bounce off a very, very long-term declining channel or trend line. We found the bottom of that again for the umpteenth time. I think we could get a bit of a bounce on the Swissy. That might actually drag the dollar up overall, or vice versa, and if the dollar can retrace a little bit, maybe 200-300 pips, perhaps we can get the same on the Swissy. So going across to Bitcoin, just dipping back down again, slightly below 96,000 today as we are in the weekend. Of course, that'll create a CME gap above us, which we'll have to fill most probably. I don't mind this dipping down on the weekends. I'd rather having it dip down than sort of moving up and surging and us having to retrace to fill the CME gap. So I think that looks okay, holding pretty well. This is the support level just around about 96 to 95.5, having broken up through there last week. And of course, I'm not ruling out a dip down back to Moab, which is the big breakout level down here. That could take us down to 89 or 90,000 at a stretch if the market really does want to pull back to that breakout area. Nevertheless, we remain long on Ethereum, Bitcoin, XRP. You can see some of my positions on the chart here. We're also short on gold. I've covered this in quite some detail in various videos, aiming for these blobs down below us. And with a bit of luck, we'll get there. Holding down quite nicely after that breakdown through that little support. Just about on the 20-day moving average right now. We want to see this moving down with a bit more gusto and impetus. We want to get down to the 50-period moving average and this first trend line. We may bounce off there back to the underside of that shallow breakout ledge and then pursue our path downwards down to the next blob. That could take us closer to $3,000. I expect we'll stop at around 3,100, 200, or just below 2,900, 2,800, something like that. We'll be looking for gold to build a base at the same time. I'm also long on silver. This is a very small position compared to the gold position, and it's really just a hedge. There was some hesitation in the markets on Friday and Thursday, as you could see. A big spike down on silver holding the 100-period moving average. I made comment of that, and because of that, we hedged our short gold position with a long silver position. This long silver position is only half the size of the short gold position. So if these keep moving down, we'll keep on making some profits. And then Dr. Copper did try and rebound a little bit on Thursday and Friday, actually, looking quite positive. Still holding the 20-day moving average and holding the 100 where we spiked down to on Wednesday. The 200 is just below us, but we are below the 50 period still. Notice how the 50 period is a bit of an over-under sort of level, pretty key support, and we broke down there. So maybe a little bit of a struggle to get back up through there if we do try. Okay, going across to energies, let's quickly go through the other ones. Apart from natural gas, uranium, we remain long. Nice surge up. So we have good profits on URA, getting long at about 22.8, and UEC getting long at about $4.70. So that's looking good. Brent crude, just waiting for this to bounce off the support line. Doing okay so far. Bit of a one down, one up candle formation, reversal pattern there at support. We have two small long tranches on WTI, and I'm waiting for this to get back up into Moab to reverse and resell. My feeling with WTI is that we've entered a new trading range now for the rest of this year, and that would be roughly between around $70 and $50. We're closer to the bottom now, so I'm looking for a move back up to the top. Maybe 67, 68, maybe even fractionally through $70. There's the 200-period moving average. We might just need to clear that out with a bit more bouncing up through there, like we have done on previous occasions if you look to the left. So I'm happy with that position. It'll take a little bit of time to play out. And going across to natural gas. Now, we took a short position. I must emphasize, this is a 10% size position, very, very, very small. And we took it based on that reversal candle on the 4-hour chart. But I did make a comment on X and also on my private channel and on YouTube that if we look at the day chart, this is looking pretty constructive. That's where we got short with a tiny 10% position. I'm still holding that position, looking to sell higher up at the 100-period moving average at about 3.68 or 9, but preferably up into about 375, where this confluence of the two moving averages, this market structure break, the order block, and the big 375 number around which natural gas often pivots. So we have a very tiny 10% position on there, and I'll be looking to add a bigger position up into some of these levels. On the 4-hour chart, the 200-period moving average is at about $3.75, that level there where we last went short. We'll probably try and rinse and repeat if we get up into that level, short again at 375, but allowing for what I said earlier, if you remember, that I think we might be in a new natural gas range going into the rest of this year. That range could well be somewhere between $3 and $4, so allow for moves up to $4. There's all sorts of further resistance up there. Going back to the day chart, you can see the $4 level, the most traded range for quite a long period earlier on in the last couple of months, and that's where we broke down through. Also lots of order blocks and moving averages up here, and also, dare I say, it's probably the 78.6% retracement of the move down from the top, from 468. So somewhere between $3.75 and $4, folks, is where I'll be looking to add a proper trade onto the short natural gas. Of course, it is Sunday and we'll be gapping up or down one way or the other as the market opens in a few hours' time. So I'll be keeping an eye on that. Keep an eye on X. If you haven't joined me on X, go and follow me on X because I often put up tweets late on a Sunday night, my time, when the natural gas market opens. Moving across to some of these other things, the Rand strengthening yet again on Friday, quite considerably actually, despite everything that's going on in this country politically. Obviously, stronger metals and minerals prices have driven the Rand up a bit. This is the dollar Rand, so it's moving down. But a big surge up for the Rand on Friday again, amidst rumors, of course, that there are several interested parties, not from South Africa, interested in the mineral resources in this country. Now, the 10-year yield bouncing back up again on Friday, surprisingly, still holding that neckline on this potential head and shoulders pattern and looking less and less likely to play out. Nevertheless, let's see how we go. I'm going to ignore that big whipsaw as if it didn't occur, and I'm holding on to that pattern. This right-hand shoulder could extend out a little bit asymmetrically, I suppose. And in line with that, we've gone long on TLT. We got into some profit there, just dipping back down again below the 200, and failing once again at that 89, call it 90 sort of level. So I said I wasn't going to get back into that trade, but I did. So maybe I'll regret that. Anyway, going across the softs and grains, not a lot of change on Friday. Bit down on coffee, which is good. Cocoa up a tick, which is not great. But wheat, soya, and cotton all bouncing up a little bit, as did sugar. A little bit of a spike low on sugar, which is great. And then we're also short on orange juice, which moved down quite nicely on Friday as well. So all of our softs and grains adjusting into the sort of correct direction for us. Well, folks, I hope this video was useful for you on a Sunday afternoon. Please join us in the live stream tomorrow if you feel up to it and if you're around. The link will appear on this channel tomorrow. Make sure you subscribe and notify to make sure you get the notification. And if you want to join us for our private members group, live sessions and other perks, click the join button for $1 a month. Take care.
Sticks, they never lie. Swing and sway and touch the sky. Buy low, sell high, that's the game. Find the trend and ride the fame. Bulls and bears, they all unite. Dance of numbers day and night. Swing, trader, swing, don't you stop. Catch the rhythm, make it pop. Don't get greedy, don't get mad. Feel the pulse, it ain't